Okay, now on to a stock obviously we were all curious on, no doubt. We were very curious about Docusign. Had to be, right? So they just reported earnings. They were down a solid 8.5% during the normal trading session, and now down over 2.5% after reporting earnings. That number keeps declining though, so we're going to take a look at these earnings and see what the reasoning is for Docusign getting just a smashing. Naturally, this 8% was mostly due to just the general market dip today. Nothing super crazy, but I do want to see why the earnings are down 3% now. Son of a gun. Let's look at these earnings. So Docusign non-GAAP EPS of 17 cents beats by 9 cents, but a GAAP EPS of negative 35 cents misses by 7 cents. Now, I don't think that's a main factor in this, to be frankly honest with you. For the most part, these unprofitable companies, really, investors have not been caring one bit whether it's a miss, whether it's a win in terms of GAAP EPS. They haven't cared about profitability all that much. Because in most people's eyes, it's just, they care about the revenue line, which it looks pretty good for this company. $342.2 million, up 45%, which is beat by $23.65 million. That's a good revenue line. So I think it's more due to just the negative sentiment in the market today, why it's down after hours, because typically stocks like this will be up after a beat on a revenue perspective. Billings of 405 versus a consensus of 340 million. Crazy number there. Crazy good number there. Here we go. The CEO, Dan Springer. We are just scratching the surface of our agreement cloud opportunity and believe we are increasingly becoming an essential cloud software platform for organizations of all sizes. Now, if you don't know what DocuSign is, it's a digital signature, basically, which honestly makes a lot of sense for everything going on, especially right now, with a minimal touch society. DocuSign's pretty nice. It generates a digital signature for you to sign on documents. So, obviously pretty exciting, and obviously, as they mentioned, organizations of all sizes could be using this platform, which is why I think the stock's been going up quite a bit. These people were fortunate enough. They were nice enough to give me earnings slides too, and we'll look at that. Subscription revenue rose 47% during the quarter, pretty massive. Dan Springer here again. Hey guys, Dan Springer here. In an acceleratingly digital world where business can be conducted from anywhere, the need to agree electronically or remotely has never been stronger. As shown in our 61% year-over-year billings growth. Suck on that. 61%. You suck. We are just scratching the surface. Boom. I'm going to repeat myself. No, I'm not. That was Dan Springer. I got him on the phone here. Good quality on the phone call, but hope you liked that one. Billings were $405.7 million compared to $340 consensus. Big stuff. Gross margin flat at 78% is good. Good gross margin. Cash flow from operations totaled 118, and free cash flow was 99 million, nearly 100 million there. Cash equivalents we'll be looking at. Oh yeah. From a new CFO perspective, they're looking for one. They names board member and audit chair Cynthia Gaylor as the new CFO. Some people might say, why is this just, them pandering? Why not Cynthia Straightlore? It's just, you never know with these people, People are going to complain about anything. That's all I could tell you. Replacing Michael Sheridan as he becomes the president of Docusign's international business. Good job, Michael Sheridan. That's the goal, baby. That's how we make the big bucks. We get promotions out here. For the quarter ending October 31st, they're forecasting 368 to 362 million versus a consensus of 335. Massive beat in in guidance. Holy crap! Subscription revenue of 343 million to 347 million. In billings, crazy. Billings are expected between 380 to 390, and gross margin 48 gross margin. For the full year, they're expecting 1.38 billion to 1.38 billion versus a consensus of 1.32. Massive there. Good stuff. Subscription revenue of a 1.31 to 1.31. Billings of 1.62. Good stuff. Good stuff. Let's look at these slides because I want to take a look what goodness there are. Look at this 61% billings growth. They're just going to point it out to you. You see that arrow? It's pointing upwards. Yeah, at around a 45-degree angle, pretty much. So, pretty good growth there. Good angle on that arrow. That's a good angle. In my perspective, it's really closer to around a 35-degree angle, but I'm not going to get too technical with these guys. I'm going to pull up my protractor. Whoa. So obviously revenue from a enterprise and commercial and web and mobile standpoint both saw increases here, but obviously enterprise and commercial grew a little bit larger, so it takes a little bit larger percentage. Strong revenue visibility. Most of it is in subscription, obviously, as that number continues to rise. And average contract length by contracts, 17% are greater than 12 months, but 83% are less than 12 months or equal to. So obviously you want to see that definitely change in that perspective. You want to see larger contracts, baby. Large and grower customer base. Customer base grew 39%. Enterprise and commercial customers grew 55%. Pretty nice. Non-GAAP gross margin, not much movement there. Headcount overall, as far as their hiring, has increased significantly year over year from 3.5 thousand to 5,000. Woo. Pretty nice there. Non-GAAP operating income went from -$1, flat to, a positive number here. You like to see it. And cash flow seeing a good improvement as well. Guidance, we saw that, which is pretty good guidance. I can't lie to you. The appendix already, and you're going to say, send me to the balance sheet, baby. You know exactly where I'm headed. Don't get me excited when you talk about a balance sheet like that. You know I love a balance sheet. There's something wrong with me, and I just love a balance sheet, okay? I don't love when you give me a 6-month ending balance sheet, though. I much prefer a full year, okay, baby? Okay? I like a full year. A full year. Total current assets has increased. $968 million versus $943 million 6 months ago. Good increase there. Total assets in general increased as well. $2.05 billion versus $1.89 billion. Good increase there. Around $100 million increase. Total liabilities. I gotta be honest. Total liabilities increased by more than the total assets did. So don't like that. 1.5 billion versus 1.34 6 months ago. Leaves a stockholder equity of only $500 million versus 546 6 months ago. I don't like to see that sign of the balance sheet, right? I don't like seeing that aspect of it. Now again, in total, the balance sheet did technically grow as far as total dollar amount on the balance sheet, but I don't like a shrinking stockholder equity. You know me. I want to see that number rise. And this is a company, obviously, not profitable, with a market cap of $44.5 billion, when, they're only expecting, 1.3 billion, was it? 1.8 billion? What was it? Where's the number at? Where's the number? 1.3 billion, as I said. I told you the whole time it was 1.3 billion. So $1.3 billion expected. Trading at a market cap of $44 billion. It's a little pricey for me, right? Little pricey. Right around 30 times that multiple. And no PE ratio, obviously, as the company's not profitable. The numbers are good, and I do like the future of this company. I can't lie to you there. As far as valuation, I don't like it at these levels. I think it's a little bit too close to its 52-week high of 290, which is obviously a decent bit away, but I think it's still too close to that. This downward move definitely helped. but I don't think I still like it at these levels at 240. I like it a little bit closer to 200, but for me, it takes a little bit. I need cheaper valuation if I'm going with a non-profitable company. Now, I can't lie to you, the revenue line is a pretty one. And I do think the total addressable market for this company is pretty massive. I do think it is. And I think Docusign's got a lot of potential here. But again, competitors coming into the industry, we'll see how that goes. That is all I have for you today, though, and I hope you enjoyed.